Welcome everyone to Montaka's quarterly update for March 2022. While significant market volatility and price declines continued during the quarter, Russia's brutal invasion of Ukraine and economic sanctions have exacerbated supply disruptions of many important economic inputs such as energy and food. Meanwhile, China, the world's second largest economy, has affected new lockdowns of large cities as the latest highly contagious variant of COVID spreads domestically. Now, of course, this all comes at a time when inflation is already high in many large economies. In recent weeks, the Federal Reserve hiked interest rates for the first time since 2018. Stagflation, in the form of high inflation driven by supply disruptions, but with weak economic growth driven by monetary tightening, is now a likely scenario. If we take a look at what happened to different sectors during the March quarter, we can see that most sectors sold off, especially many tech-related businesses, including several that Montaka continues to own. Meanwhile, if you happen to own oil and gas businesses, you likely had a very good quarter. But beware, because we believe that what worked well for investors in Q1 will not work particularly well for investors over the next 5 to 10 years. Many of the world's highest quality businesses, particularly those in the technology space, have seen their valuation multiples compress sharply of late. Now, part of what's going on here is that valuation multiples of businesses that are growing, which is often a good thing, are relatively more sensitive to increases in interest rate expectations. And expectations for rate increases are significant. Bond markets are already pricing in another 9 quarter-point hikes over the next year, taking the Fed's policy rate to 2.5%. But here's one important thing to keep in mind. Equity prices reflect the value of cash flows that will be returned to shareholders into perpetuity. So it is not the short-term risk-free rate that matters, but rather the long-term risk-free rate. And the long-term risk-free rate, as reflected by the 30-year US Treasury Yield, shown in the chart in the blue line, is not increasing by nearly as much as the short-term rate, which has gone through the roof of late. And this is the pink line in the chart. And you may be fascinated to learn that bond markets today already imply that the Fed will be cutting rates later next year. So we believe the important takeaway for equity investors is that the valuation headwind from higher interest rates is likely overstated today. By taking a long-term view, Montaka can look through the short-term turbulence and remain focused on owning high-probability, long-term winning businesses in highly reliable transformations. Stock prices of some of the world's highest quality businesses have also sold off materially over recent months. For businesses like Salesforce, the global leader in enterprise customer relationship management, and Microsoft, for example, future earnings expectations have actually increased recently, and yet their stock prices have been falling. So if you take a look at the chart showing, the pink lines represent how consensus expectations for next year's earnings have evolved over time. Basically, they continue to increase as analysts upgrade their assessment of how these businesses are performing. And yet, the company's stock prices have sold off. So said another way, these long-term winning businesses have recently become a lot cheaper. That is, they are less risky, even though they probably feel more risky to many investors today. And this perhaps explains why Amazon, for example, announced a new $10 billion stock buyback in recent weeks. Its board, no doubt, views its current stock price as materially undervalued, as we certainly do as well. We encourage investors to review Montaka's March quarterly letter. Given the significant volatility of late, we took the opportunity to analyse the academic research on stock price drawdowns. Now, what is very clear is that drawdowns are a natural and unavoidable, albeit uncomfortable, part of the investment journey. As Morgan Housel, author of the excellent book, The Psychology of Money, points out, quote, "Volatility is the price of admission. The prize inside is superior long-term returns." Today, we believe many of Montaka's investee companies have been substantially oversold. These represent extraordinary long-term investment opportunities in our view. And as such, the composition of Montaka's long portfolio remains largely unchanged. Our portfolio exposures continue to be dominated by high-quality, developed market earnings streams with modest select exposures to emerging market earnings streams. Finally, we published our most recent white paper during the quarter. It's called The Amazing Hyperscalers, Why Epoch-Defining AI is Today's Most Important Investment Theme. Now, this is a 5,000-word detailed research report on artificial intelligence and its investment implications. We share our observations on the current explosion in the development of applications that leverage AI models. And we show how the compute intensity of AI model development is much, much higher than for most other forms of software development. And we infer, therefore, that there is a high probability that future demand for compute and storage services will be much higher than most are currently expecting today. And under this scenario, of course, the world's leading hyperscalers, including Amazon, Microsoft, Alphabet, as well as Alibaba and Tencent over in China, will benefit substantially. And this is one important reason why these businesses continue to feature prominently in Montaka's portfolio today. If you would like a copy of this white paper, simply go to montaka.com/AI. And with that, we'll leave it there for the quarter. We thank you again for your ongoing partnership and patience. It is through these volatile periods that nerves are tested and the investment experience can be unpleasant. But we hope you find peace of mind knowing Montaka's entire staffing group continue to work every day, dedicated to our best analysis and processes to generate the best possible long-term experience for Montaka's investors.